Okay, let's talk about this. Why tech stocks are crashing. That explain two risks of events. Analyze past the April chart. One is this. Risk one, long-term interest rate. So I always talk about this long-term interest rate. Why I always bring this one here is they have a reason, of course. So I will talk about the reason. Investors see the higher interest rate as the biggest threat to the stocks. Expect to 10 years yield to the hit to 2%. So now it's a 1.7%. It's most likely it's going to 2%. It's going to hit 2% easily because like it's still uptrend. And then you may wonder why this the interest rate is important to the many of the stocks. So the stock and the bond have the inverse correlation. When the stock is going up, then this bond is going down. The bond, for this example, the 10 years yield bond that is going up, and then we see why during this event, then stock is going down. That is basically historically that's the way how, because for example, this interest rate is 2.0% in the bond. Then why do we need to risk our money into the stock? If we just put the money, all the money into this the bond, then we can it's guaranteed I can get 2%. So that is why. So the bond is more safer way. Then the stock is more dangerous. So if this interest rate is higher, then many people think they put the money into here, into this the bond, or not only the bond, many of the stock stuff. Like for example, the long interest rate is not only the bond. For example, right? Many of the money lender that is also affected by this long-term interest rate. And also the property, and also study the student loan or those kind of things. And many of the long-term interest rate is decided by the market, which is normally we use for the many of the interest, like so those stuff is included here in the long-term interest rate. Okay, so the short-term interest rate cannot control the long-term interest rate handle perfectly. Short-term interest rate is still it's giving the direction for the long-term interest rate, but still they cannot control everything. For example, currently the FRB gives us the 0.25% as a short-term interest rate, but long-term interest rate, the 10 years treasury bond is 1.7%. Why we see this difference? Because the market is expecting the short-term interest rate is decided by the government. That is for sure. It's a fixed one. But long-term interest rate is decided by the market. Why? It's because, so this is the one of the example, right? So 2 years interest rate and the 5 years interest rate. This is a 10 years interest rate. Those are the treasury bond. And normally like 2 years treasury yield bond follow the short-term interest rate, because like it doesn't have much the difference, like 1 year interest rate and in 2 years interest rate, it's not much difference. But 10 years interest rate has so much difference. So when it comes to the long term, the speculation, long term, the perspective, then the market will decide that interest rate. So, for example, currently the market is thinking from this is a macroeconomics point of view, market is thinking, okay, so the economy is recovering now. Why? It's because like unemployment rate is coming down, now it's at 6.2%. GDP growth rate is also recovering, and also the inflation rate is also going up. That means like people tend to buy more nowadays. This CP corporation. So yeah, so the many of this indicator is showing the economy is recovering. That means if the investors think that okay, so economy is recovering, that means like people want to go to the school, people want to buy house, people want to buy the more things. So if those events happen, then the interest rate also going up. That will be decided by market, not decided by central bank. So so because of that, even this 10 years yield bond is also going up. And then another reason why the expectation is very high is the vaccination. So the investor is expecting things become normal. Why? Because the vaccination is, as I showed before, the U.S. market, the U.S. coverage for the vaccination is now it's going up a lot, and then it's very steadily going up. Now it's 30% or so. Even Israel is 50%, and it's showing the effect. The efficacy is very high. So everybody, like investor, is thinking, okay, so the things become back to normal. So this is the proof, evidence. For example, this one, Southwest airline. This one is a domestic airline versus this one is an American airline. American airline is international airline. It's not only the domestic, but also they have the international one. But their stock recovery is very slow compared to this Southwest. Southwest is only focusing on the domestic airline. Then they already beyond the 2019 level. But this AAL, American airline, is still half of the 2019. So from this point of view, we can see the investor is already expecting the at least domestic one is recovering, like back to normal, because just I mentioned the vaccination. So the more bond tend to reduce, so the interest rate, the lower buying the bond will tend to raise up the interest rate. So this is we had, I think they had this FRB had have the committee, and they discuss about whether we should raise up or not about the interest rate, as well as they are talking about whether they keep buying the bond more or not. Currently, the most of the investor is thinking like they may reduce to invest the money into this treasury bond. So that's why this is another reason the interest rate is going up. If they are planning to buy more, they are announcing, okay, we're gonna buy more the bond. They will then the investor will think, okay, so the bond is going to high. That means like interest rate is going down. This is kind of inversible correlation. So if the FRB buying more the bond, the treasury bond, if that means this interest rate is going down, shifting down. So this is it's kind of, I don't know, so that is a relationship here. So then the short-term interest rate is currently the 0.25, and the short-term interest rate, the rate at which the short-term borrowing affected between the international institution or the rate at which the short-term the government paper is issued or traded in the market. So the bank, actual bank, for example, Goldman Sachs, Morgan Stanley, or many of the banks there, right? So those bank is when they borrow money from the central bank. Central bank is the one who is issuing the money, and if they are issuing the money, and then they are borrowing the money, the interest rate is 0.25%. And then that's why the bank is trying to lend the money to the people more higher interest rate. So that's how they are making money. So this is a relationship between the long-term interest rate and the short-term interest rate. How each of these interest rate works. Yes, and then high-tech company aim at growth more than debt. So long interest rate matters. So why the high-tech growth company is the stock of the high-tech growth company is going down if the interest rate is going up? It's because this one is saying so. So the debt, if they tend to have more debt rather than making profit. If they make a more profit, they try to invest the money into the R&D, so the research. Then so that's why they try not to make trying to leave the profit as is. They try to invest the profit into the R&D, and then also many of the companies still is borrowing the money from the bank or many other stuff. So that's why if this interest rate is going up, that will be more or less is affecting to these high-tech companies because they have to invest more and they have to borrow money, and then that money is coming from this interest rate. We come with the interest rate. And then I think I talked this one before, but I will just recap about this again. How the stock price is decided? Stock price is decided by future price. How the future price is decided? For example, currently I have like 10,000, and the futures 10,000 and then current 10,000 are different. If the interest rate is 10%, for example, current 10,000 and the futures 11,000 is equal. Now, if this interest rate is going down, then the current market trying to adjust the price. So the stock price previously it was talking about 11,000, for example, right? If we talk about 11,000 as a future price of the market in the financial market, now it's the current. If the interest rate here, the interest rate is going down from the 10% to the 1%, then they have to recalculate this current price as a 10.9 thousand. So that's why if the interest rate is going down, the current stock price is going up. But if the current the same like if this interest rate is going up like now, then this the current price will going down. So that's how the investor will calculate. Now this is the QQQ and then the 10 years yield bond. So this around here is the event, the COVID-19 event. After the COVID-19 spread out around 2020 February, most of the stuff is going down. Then after that, this the blue one is a QQQ, and then this red one is the 10 years yield bond. 10 years yield bond is going down more, even the August, but still the most of the stock market for this tech stock market is going up. And then after it's reaching to high, very high, around this September 2020, then this 10 years yield bond is going up, shifting up. Then it's this QQQ is going down, but still it's going up. But nowadays, after the 2021, the 10 years yield bond is steeply going up. Now the QQQ is going down, and then currently it's lingering around here. So the one is I already talked about the risk one. One is this interest rate. Another reason why I have talked about this risk too. Loss of the sustainable investment. Sudden loss of the sustainable investment. So recent topic, what the market is talking about is the event. So one of the example is like Discovery Channel minus 27%, Viacom CBS that is minus 27%. Not only that, many the Chinese stock crash, GSX that is an online learning company, they're going down a lot here, like after 2021. And also this one is IQ that is also going down, online movie, online video, the company that is also going down like this. And then it's involving actually like the bank like the Goldman Sachs or Morgan Stanley involved in this event. Why? It's because here I can show you like how they did. So this is a block trade. So the block trade is what? So the block trade is they are trading behind this exchange. They don't have to trade directly via the exchange. For example, Nasdaq, NICE, they have after today, for example, right? So they open the market from 9 and then they close 4. And then within this time, like normal people, they just buy and then sell their own stock. But however, they don't have to do that with most like this kind of the broker. Broker is basically they can trade directly without the exchange. So how they do? So for example, right? So the broker A, they are selling like for example $99 for some stock. They have they bought some stock as $1990, and then because for some reason they have to sell it, then they buy as a 95, and then eventually this Goldman Sachs they sell the stock market gained from this broker A. They just selling in the Nasdaq. Same goes the broker B and the broker C. They actually trading each other without going through this Nasdaq, the actual open market. So they can trade and they buy, they decide like quantity and the price, and eventually they negotiate, and then if they agree on how much and how much quantity, and they can just trade directly. And then after that, this Goldman Sachs, they will buy it, and then eventually they will sell the stock into this market. But however, normally this kind of like a block trade, most of the bank, they will just negotiate. They will try to safely, so it doesn't cause a tumble into the market. They do out of the stock time, like the market time. So 9 to 4, that is a market time. They do the block trade out of this time. But however, this time the Goldman Sachs was trying to do that. But however, the Morgan Stanley, they sold the within the market time for some of the stock, like this Chinese stock. So that's why it's going down significantly. Like yesterday, 2 days ago. Yeah. So so that is a broke trend. That is what happened. So the trigger was this family company, Arche, uh, archegos, and then they actually had a lot of the actually, yeah, some of the stock they hold the Chinese stock, like this tech Chinese stock I showed before, that is going down. So so that is why they have to sell it. I mean, they are doing the margin trade. So what is a margin trade, and then what is a margin call? So this is a leverage, right? So for example, I have only like $200, but I can still like buy $10,000 value of the stock by utilizing this leverage. So that is a margin trade, and then they do that kind of things a lot. And then because many of the tech stock, like Chinese tech stock, going down significantly. So after that, they have to sell it. So that is called a margin call, because a margin call is you have to prove you still have money. You have to show the money evidence as evidence, and then even though the price is going down significantly, but still if they can show certain amount of money, not everything, they still can keep it. But however, I think they couldn't do that. That's why they have to cut the loss. Then eventually that lost cut is going to the many of the banker, and the banker is supporting this company. And then eventually this banker also lost the money. So that's how this the current turmoil happened. Okay, why this happened? So why this happened? So there's another trigger here behind here. So the ADR, that is a market under the Nasdaq, sorry, the NICE, and then New York Trade, and then which is they are trading about the foreign stocks. For example, Chinese stock or Japanese stock, or many other foreign stock. This ADR, they are handling about the Chinese stock, like Baidu or the Alibaba or those stuff, like many of the Chinese stock. And then the announce from the SEC, they are warning about this Chinese stock. It's because so they have some news about the Chinese stock. They may some of the things couldn't be in the Nasdaq or NICE stock. So that's why many of the stock is going down. This is the Baidu, Neo, GSX, Alibaba or Tencent. Everything is going down after the SEC announcement, as well as I think the recent trend is they are very worried about, they have very cautious about this Chinese stock. So and also the another thing is like the Biden is still tough to the China. Biden team talk tough on the China as the early sign show the policy won't differ sharply from the Trump's. So Trump was very tough on the Chinese government as well as the Chinese stocks. Like if you remember, so the ByteDance, they have the TikTok. He trying to ban this TikTok. I think that trend is still here. They are very, very tough to the Chinese stock and then Chinese service. So that's why many of the stock is going down, and that will trigger the company, the archegos, and then eventually they have to lose the cut. Then that will affect this Goldman Sachs, Morgan Stanley. They have to sell it here, And all of this broker A, broker B, broker C. This is kind of example is Nomura or Credit Suisse or any of this is affected by that. So that's how it goes. Okay. So somebody's loss could be your loss. So you have to be very cautious and protective. Okay, let's check about the April data analytics. I prepared the April data here. So how I calculate here is I just, as always, I just grab from the Yahoo Finance. From the Yahoo Finance, I grab the data, and then that is showing here. Like, okay, sorry, here. This is just example. For example, Apple, Adobe, AMD, Tesla, right? I just put all the data into the one chart, but if I put all the data into the one chart as the same the stock price, then it doesn't show correctly. So I put everything as a percentage. I convert everything as a percentage. Now it's like this is more easier to see. For example, I can show how last 2 months the event, last 2 months the movement of this each stock. For example, the Apple, Adobe, AMD, Tesla, and then this is the 2000. Okay, so this is 2020 February 3rd till this one is 2020 April 30th. So how they went. For example, after this COVID-19 situation, then it's prevailing, spreading out everywhere. This is a high. February 29, February 19, 2020. That is a high, and then after that, it's going down. This one, Tesla, is minus 53%. Even Apple is minus 25%. And then it's coming back again around here, April 3rd. It's minus 4% as a Tesla. No, this one is Apple. Tesla is 2% plus. So that's how we see. Okay, so I can change the calendar easily. So from here, I just put all the Nasdaq 100 into one place. But since this one is hard to see, I just change one by one. So for example, right, I will grab some 10 stock. Apple, Microsoft, Amazon, Tesla, Facebook, Google, Nvidia, PayPal, Adobe, and then CMCSA. Okay, so if I do that, then what's gonna happen? By the way, this one is last 2 months. Okay. So now it's here. It's March 31st March. Okay. So Tesla is minus 20% compared to this one. This one is February 1st. So many of the stock, especially for the tech, is going down. This is a zero. Okay. So below zero, it's most of the stock is going down. Compared to 2 months ago. Now it's only this Facebook, Google is going up compared to 2 months ago. So I will change this calendar to 2 months ago to 14 months ago. Means like 1 year ago. Okay, till this one is minus 12. Then I can see the last 2 months of last year. So what I mean is like this one is February 2020. Now this one is 2020 March 1st. So 1 year ago, exactly same data 1 year ago. And then yeah, so same things kinda. This is a zero, right? Most of the company is going down. And only this Nvidia is going up, but otherwise most of the company is going down. Okay, so this is the 2020 last 2 months trend. But since they had this COVID-19 event last year, so it's hard to see. So I will just move back more, meaning is 2 years ago. So 26, then this one is 24. Then we can see 2019 data. Okay. Now this is the 2019 data. This is February. Okay. And then this is March. Actually, I can change this number to 23. Then I can see the whole April. Okay, so now we can see this is a 2019 February to this one is April, end of the April. So this is a 0 point. So that time 2019, this 3 months, it's steadily going up except for this one. This one is Tesla. Okay, so the Tesla is minus 22%. Okay, that was 2 years ago. But except for Tesla, everything is going up, which is good, which is amazing. Let's check about 3 years ago. Okay, I will just add to 35. And this one, oh sorry, not this. Here, right? 38. And this one is going to be 35. 35. Yeah, 35. Then what's gonna happen? We can see February. This is the end of the April. So 2018, it's mostly it's going down. Okay, mostly it's going down except for this. April, Adobe, Amazon, they are going up. Adobe, Amazon going up 12%, 11%. But otherwise, yeah, it's most of the stuff is going down. Yeah, here. Google, Tesla is minus 15%. Yeah, so that time was very hard time for them. Okay, another 2 years ago. Okay, let's check. This one is 40. This one is 40. No, not 40. 40, 50. Yeah, 50. 50. Then this one is 47. So this one is a 3 months. Okay, this is a 2017. Long time ago. The Nvidia is going down minus 8%, but otherwise it's going up. So but what I can see from here, after April, it's boosting up after April. So April is probably it's growing, the stock growing month maybe. Maybe I can check one more. 2016. So this one is 62. This one is 59. Okay. After March, it's slightly going up, but after April, it's going up more, I think. Yeah, except for some here. Google, Microsoft is going down, but rest of others is going up. The Tesla is going up a lot. Yeah, okay. I see. Okay. That is 2016. Okay. So that's so I can check about this Nasdaq 100, which one is going up, which one is going down for last 3 months. This one is 1 week. This 1 week is many of the Nasdaq 100 is going up, but yeah, this one is also 1 year. 1 year is going up a lot. Zoom is going up, Moderna is going up, Peloton is going up. Yeah, right. But however, if this one is talking about 3 months, then this is a changing point. And then Peloton is minus 20, PDD minus 20 also. This one, Splunk is minus 20, close to 20. Yeah, some of them is going down, except for here, WP. Yeah, but overall, yeah. So this one, Zoom is going down last 6 months, minus 30%. Yeah, it's huge. But anyway, so as I mentioned before, so the one of the reason is we have to be carefully check about this interest rate, because the interest rate will suffer the high-tech growth stock, because they have more debt compared to the more profit, and the profit also they put the more profit into investment. So that is one. Second reason is we also have to check about this broker, big bank. If they do like this kind of like block trade, they may trigger huge. Like Lehman Brothers is also kind of same. They could trigger huge disaster. Now they are checking about the what's going on inside of this block trade. Currently, the SEC is checking about this, investigating this. But that one is also, we have to carefully check about that news. And also, the growing stock, like the Chinese stock or whatever, not always going up. It's always coming down. Yeah. But however, if we see from this the data I show now, from this one, maybe the April could recover compared to the March. So we will see that. We will see. Yeah. So that's it for today. How much time? Okay, almost 1 hour. All right. So thank you so much for watching this one. And then mainly I want to talk more about this kind of data more. But I also have to mention about the news too. So please, yeah, be mind. And then also, yeah, if you haven't subscribed my YouTube channel, then please subscribe. I will just mention about this financial market stuff a lot, and also the data, and also Python. All right, so that's it for today.